how will investment house prices be impacted or affected if we see if we receive no interest rate drops until November or December this year? Confidence may grow with lower inflation and shortages of houses. Supply and demand is very tight. Is it possible we will see house prices rise along with rental returns this year? So I might throw that over to you in the first instance there, Julian, to answer that question for James.
Yep. Thanks, Jacob. Yeah, I think it's a good question by James. Really, with house prices, just like just about anything, you've kind of got three factors to consider. You've got supply, you've got demand, but then you've also got confidence. So kind of like Mike mentioned before, when COVID just kicked off, confidence was at low. It's just get your shotguns, lock up the house, don't do anything, save your money. Same thing happens when you're clicking on news.com every day and you're seeing interest rate hike, mortgage cliff. If you're a first home buyer or thinking about going to investing, if you've got that news being thrown at you, or you've got people in the water cooler saying, oh, you don't want to buy a property now, it's going to crash by 30%, that leads to really just dropping in that confidence. Even with the rates being on hold, and I guess from an advisory level and an inquiry level, it has significantly increased since around about late August, September last year. There has been a significant increase of people inquiring about getting back into the property market, whether it be first-time investors or people coming back from previous years again. So, it's no secret we're at an extreme supply shortage, and that's kind of piggybacked off the back of population, immigration growth coming through, and also people are kind of forgetting the building industry's basically on its knees. You have 4 years of interrupted construction, house construction coming through. No new stock means there's no old stock to be pushed out. So people are still kind of fighting tooth and nail to even get whatever listings are available. And that is still going to continue to drive up the prices. Now, that won't happen in all markets like we're seeing here in Melbourne. And it's kind of the back off some policy changes. And me and Damien probably won't get too much into that. Otherwise, we'll take up the whole podcast here. But, we're going to see markets within markets. And just as a whole, you will still see the property prices push through. As long as that narrative continues, even if it's a neutral level. But we're already seeing, I think I saw the very first article just the other week on news.com where it's saying property prices set to soar in 2024. That's what you get. You always get these extremes where it's either mortgage cliff or property price is going to be so unaffordable you won't be able to buy a house. So I think it's probably going to be more the latter than the first.
Well, I think you're right, Julian. And if you look at history, you can throw everything but the kitchen, and the kitchen at the Australian property market, and you're not going to dent it. Throw a GFC, not denting it. Throw in a global pandemic, and everyone not even able to go to work or go outside their house for 2 years, and it didn't even buckle. So we've already seen the recovery within 12 months of people being allowed out of their house. And in fact, property prices increased during that time. It was crazy, and a little bit of a retreat, and then a little bit back again. So probably barring everything bar World War III, the Australian property market's resilient for the fact that you mentioned, supply and demand. And if you look at immigration, and Australia being a highly desirable location within a 10-hour flight zone radius of the two most populated countries in the world, being India and China, we're always going to be a desirable place. And we have plenty of space. And we're seen as clean and fresh and a place to invest, easy to deal with. So we'll always have demand. Demand will always probably outstrip supply, probably in our lifetimes.
I think probably relating it back to the question, I don't, as you've just both mentioned, we don't need to see interest rates decreasing to stimulate a buyer inquiry. People are desperate to be entering into the property market, and they have been, as you mentioned, Julian, since last August, September, October. We don't need to see interest rate decreases to create this confidence, because boots on the ground, what we've been seeing broadly is confidence returned when interest rates were on pause for the second time, and so I feel we'll be entering extremely bullish territory the moment there is an interest rate decrease. But we're already seeing bullish territory across large Australia's largest capitals. Sydney, Brisbane and Perth are extremely heated markets in many cases right now, and they have been for the second half of last year.